Wall Street is starting to show a lot of love to Palantir, particularly because Palantir is getting caught up in the AI craze. And the AI craze may be characterized as a bubble by some investors, or it may be characterized as a gold rush by other investors. The one thing that I think we all can't argue is that the market chooses what the market wants to choose. And if they do a revaluation on companies, as I'm recording this, Nvidia just hit a all-time high at $400 in pre-market. Then the market decides that, look, that's what Nvidia is worth. That is what we believe Nvidia is worth, and we are going to give it the premium, the multiple that we believe. In fact, Nvidia is actually cheaper now than it was before. At least it was at 380 because of the revised guidance. It was trading at 40 times price to earnings versus 50 times price to earnings. So there was 20% intrinsic upside to the stock based on the revised guidance. So in general, the market is having a fundamentally different attitude when it comes to companies that are poised to be the leaders of AI. The algorithms are acting different in terms of high frequency trading, and the institutional investors in terms of the qualitative analysis they are thinking about when they decide to make these decisions. Palantir is getting caught up in that, and for better or for worse, that means investors are looking to buy Palantir. I want to play a couple of videos. One is by Dan Ives. Now, this is one of the investors that is a very big name on Wall Street, CNBC, Bloomberg. You see him kind of everywhere. I think he was a little bit earlier on Tesla, Microsoft, Google, always been a big tech guy. He tweeted on May 25th, in 22 years of covering tech stocks and large cap, we have never seen a guidance range of this magnitude on a large cap tech name, and thus speaks to our thesis, this is when Nvidia earnings came out, that the monetization of AI for stalwarts like Microsoft, Alphabet, Amazon, Oracle, Meta, Apple, and Salesforce is well underway in this Game of Thrones battles among tech players. We also believe AI plays such as Palantir, Tesla, from an FSD perspective, AMD, SoundHound, as well as other contract center plays are clear benefits of this transformational tech. This is someone who is very influential in the Wall Street space. I'm not saying he moves markets, but I'm saying when he gets on CNBC, you have a lot of people that have a lot of money, a lot of people that also invested in his research firm that listen to what he has to say. And as a result of that, when he's putting Palantir and Tesla in the same reign as, you know, some of the biggest companies in the world from a purely AI perspective, it's very interesting to kind of see how he, which to me is kind of representative of Wall Street, he's not the kind of Cathie Wood completely go against disruptive innovation thesis. He's basically how Wall Street thinks, and his argument is that Palantir is in this monopoly that is existing for AI. So let's listen to first his thesis on Palantir. This Farzad asked him a question about 3 months ago, and then we'll get a little bit more into the overall thesis he has for AI and the entire sector.
Is Dan bullish on Palantir? How do you think about Palantir?
Well, yeah, I mean, because my view, I mean, Palantir, you know, I think was very bumpy, right, coming out. I mean, just given their background, the government, and trying to commercialize, and we saw that since the IPO, I think they're finally getting their footing. Okay. I mean, and I think they have a secret sauce that's unique, especially when it comes to commercializing that. I mean, obviously, we talked to a lot of enterprise players, and my view is very positive in terms of what Palantir could do in terms of scale. Now it's about execution. And, you know, and obviously a lot of this AI craze, which I don't view as a hype cycle. I view what's happened to AI is much more real in terms of Microsoft ChatGPT and everything.
And look, his thesis there, I think, is absolutely correct. A lot of people might be saying it's a bubble. Look, even if you think it is somewhat of a bubble and there's a pullback coming, the fact that these stocks have been able to reach some of these prices means that there is some enterprise value, at least that the market is seeing, that is unlocked. And ChatGPT, I think, is the best example. This is the first product from an AI perspective that has been the earliest product to reach 100 million people. You know, TikTok, Facebook, Netflix, they could not hit 100 million users before ChatGPT, which did it in about 2 months. That shows that it's not like crypto, right? The whole world was not trading cryptocurrencies, and they were speculating on it, but they weren't necessarily trading it or having a use case for it. When something hits 100 million people, and it's probably close to 500 million people by now, that quickly, and people are using it, that means there's some potential to it. And if it has that much potential for consumers, you could imagine what potential that has for the enterprise. And so Dan Ives, I think, is speaking to a very good point here, which is that this is not just something. This might be a bubble in terms of asset prices, but it's not a bubble in terms of the core technology, similar to, you know, what the internet was back in 2000.
Yeah, that's been a space that I've been just so fascinated by. I got access to the Bing beta thing, like the new Bing or whatever. Right. It's sick, dude. Like I can literally go. It's sick. I can go on a website, on a earnings report, and be like, "Can you summarize this and compare it to this and compare it to this link?" And then it like spits it out for me. I'm like, okay, this is nice.
But it goes back to this world we're living in, whether we're talking about Tesla, talking about AI, talking about some of the cybersecurity. I mean, it's a fourth industrial revolution that's playing out despite the macro.
real quick on the Palantir story, because that's been something I've been trying to follow, and it's the one thing I'm still struggling with. Truly, is like, will they be able to scale outside of government with the same type of margins that they would so for example, in government right now, most of their business is government related contracts. Q4 was just their first profitable quarter. They really had to work to get there, but I'm guessing once they go commercial, their margins
But
should
it's
be a lot
always
cheaper. How do you think
yeah,
about
but
that?
it's always hard. Any company like this that's just massively successful and has such a moat within federal that you're going to duplicate that exact success in commercial, which is a lot more competitive. So I view it as an apples to oranges comparison. But
Okay.
like, look, but that's a common issue that companies that have been very successful in federal, it's a different game when you get into commercial.
Do you think Palantir is well suited to succeed on the commercial side?
Look, I think Palantir is well positioned on the commercial side. It's really more of an execution story. And I think for them, that's why I think this quarter was like a big step in the right direction.
And, I think he's right there. Commercial is a whole different ballgame. Obviously, you got companies like Snowflake that have thousands of clients. Palantir only has around 300. So commercial is a different ballgame. But the fact that they were able to get profitable 2 quarters in a row, and that the CEO, Alex Karp, is saying that the demand for AIP, their latest product, is through the roof, that lets you think that commercial might end up being big for them. And if it is, maybe that's not priced into the stock as much as people think it is now. Now the stock is 14. It probably is priced in a little bit more, given the valuation is getting up there. But back then, 3 months ago, when Palantir was $8, people did not think they were going to actually get scale into the enterprise sector of the economy. And based on what the CEO was saying in Q1 earnings 2023, that might be happening. And we've got more mainstream media talking about AI. Let's take a look at this, and then we'll get back to one last Dan Ives clip.
News making its way into companies like Palantir, ripping over the past week with another 8% jump today. What's the latest, Renina?
Well, the latest is Kathy Woods has bought up tons of shares of Palantir. One estimate says around 6 million since she started buying up after the company had better than expected earnings on May 10th. And a lot of this excitement into the future has a lot to do with the company's AI exposure, of course. There goes that magic phrase, surprise to hear it, are you? But Palantir also guided for continued profitability in each quarter of this year. And they noted that they've seen strong demand, of course, for AI. And that's why it's driven shares up more than 98% year to date. And just today, more AI news from Palantir. It said a Brazilian fashion retail house is developing an integrated movement flow system using Palantir's Foundry platform, and that the flow is the first of its kind, and the company itself is the first of its kind to use this type of AI tech. But the flow helped them develop, optimize, and speed up the entire purchasing and inventory restocking process. I think the most interesting thing about this AI revolution, Oliver, is that we're seeing how it's impacting different industries. Who thought about this impacting retail in this way?
And this was the CA news. The CA is a retailer in Europe that has Latin American franchises as well, and essentially they're selling clothes, and they're implementing Foundry and AIP to be able to sell clothes more effectively. So as she says, who thought this would be, this is the thing. It's like, if AI is impacting every sector of the economy and Palantir can just start grabbing little bits and pieces of every sector, healthcare, energy, drug discovery, fashion. I mean, it is a gold rush. It is the time, and that's why I believe Alex Karp when he says this is our market and we have to go take it. Let's listen to Dan Ives now here. This is about 3 months ago as well, speak about Palantir and the overall sort of issue in AI and what's going on. He calls it an AI arms race, and get his thoughts. Again, he is more representative to me of the basic caricature of Wall Street, which is why I think his opinion is so interesting as he speaks on it.
Redbush Securities Managing Director of Equity Research, Dan Ives. Long title, Dan Ives. I'm just going to call you an analyst legend. How about that one? See,
if CNBC is calling you an analyst legend, I mean, like, that's kind of my point. That's why I want to analyze him in particular. There's not that many people that talk about Palantir publicly, and if he is, and his voice is kind of influential, it's just an interesting perspective to kind of understand someone who's deep into Wall Street bringing up this name. And, I doubt he's bringing it up just to kind of pump it up because his positions are much higher in other stocks like Google. But it's interesting to see him still care about Palantir.
First up, I want to show you a list of some stocks here on a board. Sure. Different AI stocks along with the BOTZ ETF. That's the Artificial Intelligence and Robotics ETF. These stocks outperforming to various degrees today. We're showing them right now to the audience. How long do you see this outperformance continuing?
I mean, look, this is an AI arms race that's happening. I think what you saw with Palantir, right place, right time, because we're talking $800 billion of spending. That obviously this race is just starting. You look at Microsoft with ChatGPT. You're looking for pure play AI plays. That's where you look at C3, SoundHound, and some others in Palantir. And right now, investors, there's a scarcity. And I think also there's going to be significant M&A in the space, both on the strategic as well as financial buyers.
Yeah, Sumo Logic just taken off the market in a PE deal, right?
And I think that's just tip of the iceberg. Because at the end of the day, Frank, there's just not many pure players. And you look what's happened, this Game of Thrones battle between Microsoft, between Google. Look at Apple. That's sort of the quietly sitting there right now. I think everyone's trying to figure out who's going to be the winners. It's not just Redmond, and I think that's going to really be major consolidation.
All right, when you say,
and so I think this is the important thing to consider for what Dan Ives is saying. He's basically making an analysis around there's not many AI pure plays. And a lot of the companies, let's say we're in a bubble, they're going to pop when that bubble pops, and there's going to be, you know, a bunch of companies that are down significantly from these overstretched premium valuations that they got because they're not the true AI plays. So, for example, C3, it is an AI play. Obviously, the ticker symbol is AI. Do I think they are able to justify the valuation they're getting because the market is piling so much money into them because the market thinks they're like this pure play AI stock? Maybe, maybe not. I don't know. But what I do know, and what I think Dan Ives is speaking to, is that there is scarcity. From an institutional investment side, there are not enough pure play AI companies to invest in. And that is the reason why Palantir is getting this valuation. I mean, like, make no mistake about it. The market does not have that many options. At the end of the day, you're either going to invest in treasuries or bonds, or is it disruptive innovation, or are you going to go back into value stocks? Or are you going to put your money into banks? Like, the market wants to go to what's undervalued. The reason NVIDIA is getting this premium valuation is because they believe there's no competition. And so I'd rather get it at 375 than chase it at 450 is from what an institutional investor would be thinking of, which is why every price target from JP Morgan to Goldman Sachs to HSBC Bank are now at $450, $440. And it was at 375 2 weeks ago because the market has revalued these companies. And so from Palantir's perspective, the beneficiary is maybe they don't have the actual metrics to justify the growth. But when you've got people like Dan Ives saying that there is scarcity in the market, by the way, he's on, you know, he's taking calls from these institutional investors pretty much every day, right? That is his job. And he's hearing that they want more exposure to the next fourth industrial revolution, which is artificial intelligence, which we can all agree on the assumption is real and is not crypto, is not some scam. Then where do they get that exposure to? How do they get that exposure? Are you going to trust that it's Arc Innovations, Roku, you know, Kathy, Zoom stuff? Is that the exposure? Or are you going to trust that Microsoft and Google are the exposure when they're already almost $2-3 trillion? And, you know, if you want a nice little return, they have to double, triple those valuations over the next 5-6 years, which is possible, but it's just a lot to ask for. And maybe AI makes that easier, but it is still a lot to ask for. Or you look at something like Palantir or even C3. C3 is like $2, $3, $4, $5 billion market cap, I think. Or it was like $2 billion last time I checked. Maybe it's at $4 billion now. Palantir at $30 billion market cap to get to $300 billion, which by 2030, $300 billion, how much is that really, you know, due to just like the cost of inflation? Maybe it's a lot more easier to get that 10x in a company like that. And it's a pure play AI play, even if the market doesn't understand that and only retail really has done the due diligence to realize that Palantir is a pure play AI company. But the market is just going to assume that, and then Palantir grows into the valuation because the market got it correct. Not because they actually got it correct, but because they were able to bet on a company that is rooted in AI. So it's up to Palantir to be able to execute, which is what Dan Ives said in the first video, which is why GAAP profitability is so important. S&P 500 is so important. But it's also really important to understand that there's not that many pure play companies that are fundamentally rooted in the architecture of AI. NVIDIA, Tesla, they have all different sectors of it, but there's not that many of them. I would say there's maybe 10. And some of those 10 might be too big to really get a nice premium, and some of those 10 might end up not being a fad over the next couple of years. I think Palantir is going to be in the final 10 that remain in this Game of Thrones battles, as Dan Ives calls it. And the question becomes, how is the market going to value Palantir as it continues to grow into this valuation and as AI only becomes deeper of a moat? So those are my thoughts. Wall Street is thinking of Palantir more like an AI company. Let me know what you think. Please subscribe to dailypalantir.com/subscribe. It's my free email newsletter that goes out every day to Palantir investors. Thank you so much for listening and watching. I will see you in the next one.